Top 10 Financial Traps Keeping People Stuck in 2025. In 2025, the financial landscape is evolving rapidly, with new challenges and opportunities emerging for individuals at all income levels. However, despite the advancements, many people are still caught in common financial traps that prevent them from achieving financial freedom. These traps not only keep people stuck in cycles of debt and poor financial decisions, but also make it harder for them to build wealth and plan for the future. In this video, we'll explore the top 10 financial traps keeping people stuck in 2025, offering insights on how to avoid them. 10. Living beyond your means. One of the most pervasive financial traps people fall into is living beyond their means. With easy access to credit cards, loans, and buy now, pay later services, it's easy to overspend on items and services that aren't necessary. Whether it's purchasing a new car that strains your budget, upgrading to the latest smartphone every year, or using credit to fund lifestyle inflation, this trap can quickly snowball. Understanding your actual needs and focusing on essentials while resisting the temptation for unnecessary upgrades is crucial for long-term financial health. 9. Ignoring the importance of emergency savings. An emergency savings fund is often neglected or underestimated, even though it can be the difference between staying afloat and sinking into debt during unexpected events. Emergencies can range from medical expenses to car repairs or job loss. Without an emergency fund, many individuals are forced to rely on credit cards or loans, putting them further into debt. Financial advisors recommend setting aside at least 3 to 6 months' worth of living expenses in an easily accessible savings account. This fund gives you peace of mind and protects your financial stability in the face of life's uncertainties. 8. Failing to invest for the future. Another major financial trap is the failure to invest for the future. Many people continue to rely solely on their salaries, never taking the time to explore investment opportunities. The result? A lack of long-term financial growth. In 2025, while retirement plans like 401(k) and IRAs are more important than ever, people still often neglect them. Stock market investments, real estate, and other assets can significantly increase wealth over time if done correctly. 7. Not prioritizing debt repayment. Debt is one of the biggest obstacles to financial freedom, and in 2025, consumer debt is at an all-time high. From student loans to credit card debt and personal loans, many individuals find themselves stuck in a cycle of minimum payments that barely make a dent in the principal. This can lead to paying off debt for years or even decades without seeing significant progress. The snowball method suggests paying off your smallest debt first, while the avalanche method focuses on the highest interest debt. Regardless of which method you choose, the goal is to reduce your debt aggressively, pay off high-interest loans first, and avoid accumulating more debt. 6. Neglecting insurance coverage. Insurance is often viewed as an unnecessary expense, but in 2025, with rising healthcare costs and the unpredictability of life, neglecting proper insurance coverage can be a disastrous financial mistake. Health insurance, auto insurance, homeowners or renters insurance, and life insurance are crucial components of a well-rounded financial plan. Without adequate coverage, even a minor accident or illness could lead to catastrophic financial consequences. 5. Following the herd mentality in investing. In 2025, there's an increasing risk of falling into the trap of herd mentality when it comes to investing. This is when people blindly follow the financial crowd, whether it's chasing the latest stock trend, cryptocurrency, or investing in real estate just because others are doing it. While these trends may seem like easy wins, they often come with high risks and lead to significant losses when the hype dies down. Don't let the fear of missing out FOMO push you into investments that don't align with your long-term objectives. Instead, focus on diversification, long-term growth, and value-based investments, such as index funds or dividend stocks, to build wealth steadily. 4. Procrastinating on financial planning. Many people procrastinate when it comes to creating a financial plan, thinking they can figure it out later or when they make more money. This trap keeps people stuck in a cycle of financial disorganization with no clear roadmap for their goals. whether it's retirement planning, budgeting, or investing. Failing to plan results in missed opportunities and uncertainty. From there, you can begin to create a strategy for saving, investing, and paying off debt. Seeking advice from a financial advisor or using budgeting apps can also help you stay on track. Having a solid plan in place gives you direction and helps you take control of your financial future. 3. Relying too heavily on credit. Credit cards can be a useful tool for managing cash flow, but relying too heavily on them is a dangerous trap. Many people in 2025 fall into the habit of using credit for everyday purchases, relying on borrowed money to maintain their lifestyle. When the credit card balances grow larger than what they can comfortably repay, interest rates and late fees add up, creating a financial nightmare. It may be a good idea to avoid using credit for non-essential purchases and limit your credit card usage to things you can afford to pay back immediately. 2. Not understanding taxes. Taxes are often an overlooked aspect of personal finance, but failing to understand how they work and how to minimize them can cost you significantly. Whether it's not taking full advantage of tax-advantaged accounts like 401(k)s and IRAs, or not properly filing deductions and credits, misunderstanding taxes can leave money on the table. Additionally, look into tax-efficient investment strategies, such as investing in municipal bonds or using tax-advantaged accounts to reduce your taxable income. This helps you keep more of your hard-earned money instead of paying unnecessary taxes. 1. Living in financial denial. The biggest financial trap of all is living in denial about your financial situation. This includes ignoring your debts, not tracking your expenses, or avoiding difficult financial conversations because they feel overwhelming. Living in denial only delays your financial progress and makes the problems worse over time. By acknowledging your financial situation, you can take the necessary steps to improve it, whether that's through better budgeting, debt repayment, or investing for the future. What do you think of our video? Let me know in the comment section below. Also, subscribe to our channel before you go. Thanks for watching.